Hello, guys. So this is a pre-market analysis of 23rd of July, and the scenarios are not that good. We are going to get a gap down opening further. So yesterday we closed at 24,000, and again very close to 23,800, which is a major support. So that has been the swing low that we have seen, and the market was in this range of 23,800 to 24,300 for quite some time. This is the range, and now they are coming on the downside of the range. So this situation is going to be very difficult because either they will take support, most probably they'll take support because there is a huge, definitely be a strong defense at that level. Now, if that level is broken, that is when all these put sellers will go for a short covering, and then that lead to further downside move, right? For put seller, then what I'll do is I'll try to extend my range by selling further puts at 23,500. So then the range get extended to 23,500, right? So then there is a possibility, most probably 23,800 should act as a support. And just because it's a support, that doesn't mean that on a sensex expiry you can buy a call option and hold it. No, by otherwise, even if it goes sideways on an expiry day, the premium decay will be there and will eventually face loss. So the situation, if you look at it, the crude price is spiking and coming close to 100. So this is, and that is when we have seen the 24,500 level. But now again going back to 100, which is close to that peak time, right? So you see, yesterday US President Trump have tips at Strait of Hormuz. What he said is, any Iranian attack on any commercial vessels, whether it is by using missiles or drone or rocket or any other weapon, US will answer this. Now, how US will have one Iranian bridge will be broken or one Iranian power plant will be blocked. So that means a threat directly to the civilian infrastructure. So far, if you see the direct attack on the public infrastructure. So yesterday also there were US military action. That's the 11th consecutive day, and targeting, it is specific, targeting Iranian military installation. Different future attacks will be on civilian infrastructure or the public infrastructure. Now, Iran responded. Iran said if US attack on any of Iran's bridges or power plants or civilian infrastructure facilities in other Middle Eastern countries, and Iran have the potential to do that. US also know that. So I don't think that scenario will come. If that comes, it is going to escalate to a different level. Iran have already shot that we have seen before, Bahrain, Kuwait, Qatar, etc. They can attack. Similarly, Iran also stated if Iran is prevented from exporting oil and gas, then no other Middle Eastern country is also going to export oil and gas in that sense. So all these are threats as of now. There is no confirmation that US have attacked any of the Iranian bridge or power plants so far under this policy. Now, one important update that I want to give you is with respect to the shipping traffic of ships, and that is 1 by 10th of regular. On an average, it used to be 60, but 20th July, you can see 6 only. Things are escalating. 21st July, there were around 9 verified closing, but yes, definitely there is a decline, a sharp decline in the traffic, you can see, and therefore oil price have spiked almost 5%, and Brent is now around 96 and WTI is around 88. So rising our current account deficit, and then it is going to affect our rupee, right? Rupee will depreciate. It will because of that itself, FIAs will get affected, and when FIAs get affected, they'll sell, right? In Russia war. Here, this Iran war, we also already have a very good connection with Iran and we import oil, right? At the same time, Middle Eastern countries also get affected, and 80% of our oil, we will be in a big trouble, right? Again, hotels, you'll see the gas shortage and all those issues. You'll see oil shortage also. Will see this price will increase and the import cost will become higher. Current account deficit will increase. Rupee will come under market also. You'll see that impact heavily. And GIFT Nifty, you see, as of now, it is indicating 23,870. So maybe we are opening at 23,850. Further, there is a 50-point down move possibility. Previous day closed around 23,990. Have closed almost flat. Crude oil price is rising, and that actually contributed to rising US 10-year bond yields also. And there is some weakness in technology stock, but nearly flat. It closed Dow Jones percent negative, Nasdaq 0.6% negative. VIX also came down. That means it's below 17. So the weakness that you see is more related to the sector rotation and some stock specific, for increased. If you look at the Google earnings, that's broadly positive. Tesla earnings is comparatively weak. I'm not getting into that. Most importantly, Indian ADRs, all 4 major ADRs are closed negative. Out of that, HDFC and ICICI is something very 1% compared with Indian market close. So that is a fresh negative arbitrage. We are going to get 1% negative on HDFC. ICICI almost around 1.4% fresh downside. Infosys Indian market, so there is no fresh arbitrage difference. Wipro also similar situation. So overall, if you look at the ADRs, IT stocks look relatively stable compared to banks, but banking ADR is remaining very weak. ICICI and HDFC is there. I'm skipping that, right? And then overall market summary, if I want to tell you, there are positive. US-Iran conflict that's continued to escalate. No visible end of the conflict, and the Brent crude is above 95, which is not indicating cap down. Some stock specific positives is there that I don't want to discuss, but remember it's sensex expiry and 23,800 is a major support. So far the range was like 23,800 to 24,000. Yesterday's close was 24,000. So today's opening will be 23,850. There may be a dip to 23,800. Then there can be a bounce or consolidation like that. So even in the worst case, I'm not expecting that to happen. And if that happens, then there is a window open for 23,500. You need to get prepared for that. Then you'll get very good move also as an option buyer. You can capitalize. Institutional BII FIs were also sellers of 420 crore, both sold. Derivative positioning, call open interest is around 37%, which is higher. That's the resistance. And put open interest is 16% only. Compared to that, it's less than half. Participant positioning also, if you see, retailers are 19% bullish as usual, and FIs are bearish. Prop traders are almost neutral. So these are the main things that I want to discuss, and I hope you will trade with majority of the moves coming within gap up and gap down. Then it is consolidating. You may get one move here and there, but if you're not entering at the right point when you get the momentum as an option buyer, you tend to lose. As it's in the range, 24,000 straddlers keep on minting money for the last few months, and this is best for straddle players at this point of time. So let's see what we can do. And if you would like to learn this in the live market, we have the live market community. It's not a trade call providing program or anything. It's a mentoring program where you'll be able to watch my trades, and with the explanations, you'll be learning in the practical situation.